Hi, and welcome to our latest edition of FreightWaves Now, coming live to you here on Friday. So we are not only bringing it to you now, what is happening right now, but we're also going to be bringing it to you thinking a little bit ahead of the weekend. So thanks for tuning in. And today you're in for a delightful episode with what is happening with the weather. Is it delightful or frightful? Nick Austin is about to tell us. And also we have got from our editorial side of things, Paul Hampstead talking to us about volumes, what's happening in the market, is it balanced, is it imbalanced, and then also finally John Kingston talking to us about the IMO 2020 as it relates to oil markets. So Nick, talk to us, tell us, what is happening, man?
Well, we're watching a big winter storm, another weekend winter storm that's heading our way. So last weekend, some parts of the Midwest, Northeast got hit really hard by snow, but not a lot of the big cities in the Northeast, like Philly and New York and Boston, they didn't get a lot last weekend. That's probably going to be a different story this weekend.
It's looking frightful,
yes.
Not delightful.
And, tonight, a lot of the snow here around the middle of the country, across Kansas, up to Chicago, that's going to get heavier. And then that whole system is going to move through the Ohio River Valley and all the way up through the Northeast and New England Saturday and Sunday. So some spots could get a foot of snow. A lot of the big cities could get several inches of snow, but the major concern for a lot of the big cities along the I-95 corridor this weekend with this storm, possibly DC and Philly, New York City, up to Boston, is ice. They could see areas of icing. And for carriers and shippers over the weekend, particularly on Sunday, which is typically, a very slow day as far as freight movement, but carriers and shippers just need to realize that some of their loads may end up getting stuck up in the Northeast for a couple days before things kind of thaw out, because it's going to stay really cold up there after the storm passes.
Well, thanks for that report. No, really, thank you, Nick. That's great. Ice, baby, it's happening. Be careful out there. We can prepare for the weather, can't control it. So don't blame the messenger. And now coming on, John Paul Hampstead. How you doing?
Pretty good. How are you, Chad?
Great. Did I get that right about what you're talking about today?
No, I'm not talking about volumes. I'm talking about spot prices.
Spot prices, I see.
On some of the major lanes in the country connecting the biggest freight hubs. So we've got Chicago to Atlanta, Atlanta to Philadelphia, LA to Dallas, and Philadelphia to Chicago. And basically, the story here is what happens after the December peaks at the end of last year, 2018. Essentially, the market's in free fall after drivers got back on the road after the holiday. Basically, capacity has really exceeded demand.
May I ask, why did you choose to compare these four particular lanes?
Well, these are the big ones. I think if you look at something like, one of the lanes I didn't include was Los Angeles to Seattle, which is fairly stable. It's also, but you're going into Seattle. That's already a lane people don't want to look at. So I was kind of looking at, we know that spot prices are in free fall. We know that shippers have caught on to the fact that capacity is abundant. We know that brokers are chasing rates all the way down to the bottom. And when there are too many carriers in the market, there really is no natural bottom for trucking rates, because one driver might say, okay, I'm only going to take a rate that pays my fixed and my variable costs, the payment on the truck, the insurance costs, the fuel costs. Another driver might say, well, my only alternative is deadheading and not generating any revenue, so I'll take any rate that's above zero.
Well, one question I have, I know they're in free fall, but it is surprising to me that the Philadelphia market is as low as it is. Is this usually is this comparatively low always? Wow, $1.16.
That's always pretty low. But you can see right here, it's always pretty low because Chicago is a major head haul market. So it's people want to be in Chicago. There's plenty of freight coming out. But what is interesting to me is that look at something like Chicago to Atlanta, which connects two of the biggest freight hubs in the country. Both head haul markets, both have more freight coming out than going in. It's fallen 23% since the end of the year. So even what you think of as like a safe haven lane, a very dense lane connecting markets with abundant, consistent freight is kind of falling to pieces. And I should say that the version of the spot rate that we're using, DATVI,
yes,
is the initial report. It comes out every 5 business days, and it basically it can be revised as more data comes in. It's not DTVF is the final report, and so usually those numbers look a little bit differently. But what this is good is capturing the initial direction in price, if not necessarily the magnitude. So we'll see. We'll see. I'll have a better picture in a few days as these reports get finalized on DATVF. But right now, I mean, we're seeing, I think there's no telling how low this will go until about early March, when produce season really starts kicking off, and a little bit of pricing power returns to the carriers.
So so pricing power not in the carriers court right now. It's in the shippers court. The pendulum has swung officially back. The 18 months of the capacity crunch is over, and brokers are taking advantage of this volatility. So stay tuned as we continue to track the falling spot market prices and what the implications of that are in the market. Now we're joined by John Kingston, talking to us about the IMO 2020. Can you first just tell us, why is this an important moment?
Well, it's an important moment because right now most ships, big ocean-going ships, use what's called bunker fuel. It's very heavy in sulfur. It's been kind of this giant pollution machine, and starting next year, ships are going to have to stick to a 0.5% sulfur limit. Right now, they might burn 3, 4, 5%, so it's a big change. What they're probably going to turn to is something called marine diesel or marine gas oil.
Is this what happened this week with the
No, nothing happened this week, okay? But except for a report that I think is significant.
Okay.
So the fear has been in the trucking industry that there's going to be this big pull on the diesel market from ships that didn't exist before. So all there's been is like all this conjecture. What's it going to do to the price? What's it going to do to the price? The Energy Information Administration, which is the information arm and analytic arm of the Department of Energy, this week came out with a report that tried to put a number on it. I give them a lot of credit for doing that. And what they did was they took what they estimate is the normal spread between the price of ultra-low sulfur diesel at the wholesale level against the commodity price of Brent. Right. And they said, here's what it's going to rise to. So here's what that market has been, that spread's been just since the beginning of the year. So you can see it around the 43 to 44 cents a gallon.
And notice
level.
that here, Dave,
So
this is a daily.
What they are estimating is that by 2020, first of all, that number will shoot up to around 46 or 47 cents this year, and then by 2020, when the rule kicks in, it'll be up to 65 cents. So you can take this, half empty, half full analysis. On the one hand, 20 cents on the margin is a lot. That would fall right to the bottom line at the pump price, probably even more than that. It's not going to just any moves in the wholesale price are not going to fall exactly to the bottom line. It'll be more. You could also look at it as, hey, it's only 20 to 25 cents. That's not that bad given the apocalyptic predictions that a lot of people were making.
Because this is a fairly conservative forecast.
Right, now their forecast is also assuming that crude prices stay about where they are. The big question in all this is if the diesel market goes absolutely berserk because you suddenly got what could be as much as like 1.5 million to 2 million barrels of new demand, does it drag the entire oil complex up with it? That's the big unknown. Okay. So the EIA tried to do a shot in time where they said, okay, if we assume that crude prices are going to do this, here's what we think that diesel prices will do in reaction. So it's really, maybe somebody else has been quite as precise in their predictions. Maybe they have, but I haven't seen anybody as prominent as the EIA. Give them a lot of credit.
Is there any chance that this IMO 2020 will not be implemented?
I don't think so.
Okay.
Let me just say that this is what always happens. A big new rule is projected. Mm-hmm. Everybody starts running around like chickens with their heads cut off in the first year, and they start saying, please roll it back, please roll it back. But then other companies that have made investments to get ready for it say this is not fair. We've spent capital to get ready, and you're talking about rolling it back, so it tends not to get rolled back.
Yes.
And then I also would say that generally markets are resilient and they do adopt, but this is a big one. This is a really significant change. One of the biggest ones I think I've ever seen.
Wow. And you've seen a lot.
And I've seen a lot. I mean, I think I know when we went to not renewable gasoline, but reformulated gasoline in the early 90s, that was a big change. But I think that was easier to do than just yanking all this high sulfur stuff out of the market.
Wow. Okay. Well, thank you, John Kingston, bringing it to. We are, here for you every single day, bringing it to you what is happening, whether it's big news, little news, but it's the news that is happening right now here on FreightWaves Now. And join us here every day. My favorite time of the day, 4 o'clock is when we come out with this. Check us out on Twitter. Check us out on FreightWavesNow.com, and we are under the FreightWaves Now tab if you want to look for us there. So thanks for tuning in. Let us know how we're doing, and stay safe out there, and don't worry, be happy.